Boom, we are now officially recording. Guys, excited to be here for the last Back to the Institutional Basics session. If you're here on the recording, shout out to you for taking the time to be here. If you're here live, shout out to you for being on time because we are officially at capacity for this session. Now, drop in the chat either a 1 or a 2 if you were attending one of the previous 2 Back to the Institutional Basics recordings. Drop a 2 if you were on both of them. Drop a 1 if you were on just one of the 2. And I'm excited to get into the third one today because today we're going to be introducing the tertiary confirmations, if you will, to institutional concepts. Now, the past little while, I'm not going to recap everything that we went over because I do have the recordings. They're accessible. You can reach out to me personally for them. In the meantime, while we wait for them to be accessible elsewhere. But essentially put, we've been talking about and really putting into perspective how and why the markets move the way that they do, understanding institutional involvement. And if you've been here the past couple of days, you know exactly what I'm talking about. And if you've been on my sessions for the past little while, of course, this is what we talk about all the time. Okay. But just like the previous 2 sessions and lessons that we've done, there is something that I would like to start with today. And that is, something that is prior to us getting into the technical analysis and adding to what we've already discussed. It's a principle of success that's important to consider. And so I want to start with that. The thing that I'll preface this recording with is number 1, hopefully the Golden Gate Bridge isn't too distracting in the background. I literally couldn't figure out how to turn off the background. So we're making it work. Okay. But I'll preface it by saying this. If you're here live or on the recording, get ready to lock in for the next hour to hour and a half to really absorb the training that I'll be delivering. And then, of course, we'll get into a few market outlook and forecasts for the trading week. But find a place where you can be not, undisturbed for the next, like I said, hour to hour and a half. Have a notebook, white paper, blue ink, and be ready to take notes, draw diagrams, and do what you feel you need to retain the information that I'll be sharing on this session. So with that being said and that out of the way, let's get into the first principle that I want to discuss. Past 2 Zoom calls, first principle that we shared on day 1, which was Friday, was the principle of who do you listen to? Okay, who do you listen to? And basically put, you want to listen to people that have what you want and have been where you are. Those are, extremely, extremely important things to consider is who do you listen to. All right. The second success principle that we talked about yesterday on yesterday's session was the teachability index, which is 2 elements to this. Number 1 is what is your willingness to learn? Scale of 1 to 10, give yourself a score. 1 being 0 desire to learn. 10 being I'm locked in every session that I can be. If I'm not there live, I'm watching the recording. 10 out of 10 on the willingness to learn aspect of the teachability index. The second element or aspect of the teachability index, and this is the more, I would say, significant one. Okay, they're both very important, but it's the what is your willingness to accept change element of the teachability index. So you could be 10 on willingness to learn, but willingness to change is, hey, if you have to give up some certain things, if you need to sacrifice what you love for a period of time, whether that's going golfing or Netflix or whatever it is, going out on a Friday or whatever, okay, are you willing to give that up for the next year if that's what it takes to get to where you want to be with your trading, to get to where you want to be with your business as an affiliate, to get to where you want to be in general with whatever your goals are? What is your willingness to accept change? Now, there's a formula. Again, give yourself a score, 1 to 10. What is your willingness to accept change? And what is your teachability, what is your willingness to learn? Okay, the way you get the score for yourself on the teachability index is you take that first score for what is your willingness to learn and multiply it by what is your willingness to accept change score. So if you have a 10 on willingness to learn and a 2 on willingness to accept change, which means like you're not really like you're comfortable, you don't really want to change things in your life to dial more into trading or cut some things out, like if you maybe you're not willing to sacrifice, I don't know, video games for the next year. Okay, if that's what it took to get to your goals, would you be willing to do it? And if the answer is yes, well, then you got to ask yourself, why haven't I already done it? I've clearly not had a high enough score on willingness to accept change. But that's the teachability index principle that we talked about yesterday. The third one that I want to talk about today, and this is, by the way, this information is, I didn't make this stuff up. Okay. I'm just the messenger that I felt, called to share these principles of success with you guys. Just wanted to clarify that. Right. I'm just, the messenger here. I'm not the creator of this stuff. Okay. But the principle that I wanted to teach is the training balance scale. Training balance scale. Write this down in your notes. Training balance scale. Okay. Now, this is and I'll actually pull up a visual to demonstrate this, or kind of visually put this into perspective momentarily. But the training balance scale is a really important success principle to consider as well. And I'll have you guys, as you're taking notes, any cognitions or any things that come to mind that you feel called to write down, of course, write them down. All right. If you want to take pictures throughout the session, by all means, feel free to, but you will retain the information much more efficiently if you just write down white paper and blue ink, okay, specifically. But let's go ahead and illustrate this, the training balance scale. So when you think about a scale, okay, it's, something like this, okay? You got like a little, thingy here. Okay, you got the scale looking more or less like this. So the training balance scale, you have something here that's being balanced by something here. Okay, this we'll just pretend. Obviously, I could find like an actual scale picture on Google, right? You guys know what I'm referring to, okay? Scale, if I look this up, there's going to be all kinds of different pictures of scales, right? Here's one. Okay, I don't know what this baby's on a scale. That's kind of weird. Okay, but this is, this is the perfect illustration of what I'm referring to here, okay? So the training balance scale is important because there's two elements that make up the training balance scale. The first thing is the actionable steps, the activity, the putting in the reps. Okay, so we'll label this training balance scale. Training balance scale. Okay, you have the first side. This is in no particular order, by the way, but there is a difference in the weighting of this here. So you have something like the actions, okay, the activity. So if we're thinking about it in a trading context, it's trading daily or whatever your trading routine is. Maybe it's daily, maybe it's a couple of times a week, okay? It's plugging into the sessions, plugging into live sessions. All right, it's taking trade ideas. It's establishing a trading plan. All right, all the activity, the actual taking of trades, so on and so forth. This is the activity side of the training balance scale, okay? Now, this, believe it or not, makes up the smaller side of the training balance scale, which means, yeah, these are all important things to do and to consider. But when it comes to actually creating a desired result, the activity isn't quite as important as the other side of the scale, which we'll get into in a second here. But this is the first side of the training balance scale. You have actions, activity. In this case, when we're talking about trading, it's trading on a regular basis. Doesn't need to be daily. That's just what I wrote down. Plugging into live sessions, taking trade ideas, establishing a trading plan, going through the motions. All right, that is the activity that's required for you to see the results that you desire, right? You can't just expect things to fall into your lap without putting any sort of activity in. Okay? Activity is still a key component of the training balance scale. However, this side over here is even more important. And we'll go like this, okay? Because this holds more weight than the other side of the scale. This over here is the thoughts, feelings, emotions, okay? This is the spiritual side of success, if you will. Okay, I'm going to go through this relatively quickly. I could go much deeper into this, but at a glance, thoughts, feelings, emotions, the spiritual side of success, the thinking. So to put this into perspective, and we'll give an actual percentage split here momentarily, but you could have all the aspirations in the world, be putting in all the activity, all the actions to push the needles forward. But if you're not vibrating correctly, if you're not thinking correctly, and you're not feeling in alignment with ultimately where you're desiring to go, you're going to be like, man, I'm out here grinding, busting my butt to put in the reps and not getting the desired result. What's going on here? Well, maybe the activity and the actions that you're taking, you're not feeling good about the activity. You're not feeling in alignment. You're feeling frustrated because you're like, man, I gotta get this resolved and figured out so that I can change my financial situation. So you're putting in the activity, but your feelings about the activity aren't in alignment with the desired result. Ideally, and write this down in your notes, okay? Don't confuse activity with accomplishment. I can't tell you guys how many times, especially in the experience that I've had in the world of trading and investing, network marketing as a whole, I've been slammed with activity, calls, trainings, all kinds of stuff, overwhelming myself to a certain point at different times of my journey with activity and feeling overwhelmed, feeling stressed out, feeling almost like this heavy burden on my shoulders when doing the activities. And what I realize is that less is actually more. When I'm feeling in alignment with my goals, when I'm feeling good about doing the activity, that's where the best results actually are produced. It's crazy. You might look at it and compare yourself maybe to someone else in a certain industry or a certain niche, and you look at them and you're like, wow, it's like this person came in and started to learn this skill, and in a fraction of the time that I've been trading is seeing better results than me. How many of you guys have experienced this? I experienced this. It's crazy. I see it all the time. I've been trading for almost 7 years. There's people on this call that have been trading for a few months that have results that I have now, and it took them a year. And it's like, how does that happen? Has anybody experienced that in the chat? Right? I'm just realizing I didn't have the chat open. Let me pull this up. Okay. How many of you guys have experienced that? Type me in the chat if you've experienced something along those lines. Okay. For sure. And sometimes we'll feel negatively about that. It's like, dang, I'll be honest, because I'm not going to be beating around the bush here. I'm going to be fully transparent with you guys. And by the way, disclaimer, thank you for reminding me in the chat. I don't have the screenshot. This training is for educational and entertainment purposes only, not financial advice. Usually I pull up a screenshot. Past profits do not guarantee future results. They're not indicative of future results. And you should always, consult a financial professional and consultant. Any trade ideas, market outlooks, and information shared on this session is, again, for educational and entertainment purposes only. Thank you for reminding me that in the chat. So I'll be perfectly honest with you guys. There have been instances where I felt envy, jealousy, and anger towards others in the industry that were seeing results faster and sooner than I did. There's been many instances where this is the case. They say comparison is the thief of all joy. And I think, to a certain extent, it's true. But I also think to a certain extent, if that's something that you're seeing and experiencing and feeling, well, what's your teachability index? Ask yourself, what can I learn from these individuals and apply? Because clearly they've, y'all ever had that friend or person that you look up to? It's like everything they touch turns to gold. Everything. So they pick up whatever it is, and it just clicks for them. And you're like, well, I've been doing this for however many months or years, and it's Joe Schmo over here, okay, whatever his name is or her name is or whatever, get started and things just fall into place effortlessly. It's like the activity that they're putting in is less than the activity I'm putting in, and they're getting better results. What's the deal with that? And this is where the training balance scale really comes in, because you might think that the activity is more important than the thoughts, feelings, and emotional side of the training balance scale, but it's actually not the case. Okay. This side of the training balance scale, I would say, is 90 to 99%. This is, again, not my information. I'm just sharing this with you guys, but I can also attest to this with experience. 90 to 99% of success is actually from the spiritual side, or the thoughts, thinking, feeling, emotional side of the training balance scale, which means that the other side here, the flip side, the activities, the actions, like I said, less is actually more if you're vibrating correctly, if the other side, the spiritual side of the training balance scale is in check. But 1 to 10% of success is actually from activity. So this is, obviously this isn't an accurate depiction, right? 90 to 90%, 90 to 99% versus, 1 to 10%. Obviously the scale would be like, woo, you know what I mean? There's a big difference. But just as a visual, we'll use this as the example. But this is really, really important to consider. If you feel, and ask yourself this question, you don't have to respond in the chat as a rhetorical question, but be self-honest with yourself. Be self-honest, okay? How have you felt when doing the activities that you see here? How have you felt and been thinking and been overall experiencing on the spiritual side of, things when putting in the activity to push needles forward towards your goals? Does it feel like a chore? Does it feel like, man, is it like a headache doing all this? Do you feel stressed? Do you feel under financial pressure maybe to a certain extent? I know I did for years when I first started trading. And acknowledge those feelings and see how you can start to detach yourself from the outcome to a certain extent, or detach yourself from the activity to start feeling better about the activity. Because if you're thinking correctly, if your feelings are in line, things will click for you. That is typically the difference between someone who picks something up and it's like instantaneous, it just falls into place, versus someone who has been putting in activity and feels like they're just not going anywhere. Okay. The person who's got a maxed out, day full of activity, but that isn't vibrating correctly, could actually be moving backwards, not forwards. But the person that's maybe doing, I don't know, less activity, but that's feeling correctly, will be leaps and bounds ahead in terms of progress because of how this side of the training balance scale is. It's in check. The thoughts, the feelings, the emotions, they're connecting and thinking frequently about where they're going. And that's the motivation that they wake up with every morning is, okay, cool. This is where I'm going. This is the vision. Let me get to work. I'm going to detach myself from the outcome and when the outcome presents itself. And I'm going to also make sure that I'm setting up, write this down in your notes, setting up the rules so that I always win. Set up the rules so you always win. When you think about trading, we talk about risk management. We talk about R and how you can lose more trades than you win and still be profitable. Okay, I have a whole training on this on my YouTube, and we did it live actually on a session recently. That's setting up the rules so you always win. You could literally be losing more trades than you're winning and still be profitable. That's an example of setting up the rules so you always win. In this instance, with the activities, you might give yourself a, I don't know, an expectation. A lot of people that are here. Let me actually stop sharing my screen for a second. We'll go back to the Golden Gate Bridge for a second here. Okay. I feel like a New Year's resolution is a prime example where you think to yourself, okay, we're going into the new year. This is like, a couple months ago now. New year, new me. I'm going to commit myself to reading 10 pages every single day. And you feel good about it at first. But then you realize that what's easy to do, you think about it, it's like pretty easy to do. Like it's not anything crazy. But what's easy to do is also easy not to do. And because it's a new habit, habits take time. And even though 10 pages doesn't seem like a lot, you don't find the time to do it some days or whatever, you bash yourself to a certain extent. And so the comparison would be you could try and take on that. And usually what happens, and I'm guilty of this as well previously, is I'll try to do like everything all at once. It's like, okay, I'm going to read 10 pages every day, going to the gym 5 times a week. I'm going to be on a good, solid, solidified health routine and regime where I'm eating the right foods. And I'm trying to do everything all at once, right? Versus setting up the rules so you always win, so you can build from success to success. And it's almost like it's like so easy to do that it's like a sneeze. Like a sneeze comes over, you just sneeze. It just happens, it's done. So reading 1 page a day is an example of you setting up the rules so you always win. Because building from success to success, you feel good about it. It's not about how much of the book you read. It's not about how many times you go to the gym. It's how you feel after having done the activity that matters. So this is the little tip of the iceberg that I wanted to share with the training balance scales. If you have these types of activities that you're doing on a regular basis, which I know most of you that are seeing this do, if you're serious about trading, the trading daily, maybe that's just not realistic for you. There's days I'm not on the charts. Can you guys believe that? Or maybe it's like baffling, like, what? Donnie, you don't live on the charts, man? You do this full time? What are you talking about? Guys, I'm on the charts like 3 days a week, 4 days a week, 5 days a week, dialed in. But I'm dialed in. When I'm on the charts, I am dialed in, right? Plugging into live sessions. Maybe you've taken on the commitment of being on every single live session and then you've missed one. You fall off the bandwagon in the routine and you kind of bash yourself about it. You're like, oh, like I know I should be on these sessions, but I'm not. It could be because you're not setting up the rules to always win. Instead of doing one session a day, why don't you commit to one session a week and anything else is a bonus? All right. So this is the training balance scale, the success principle that I wanted to share. And this is universally applicable. These activities, these steps that you're taking in the physical are different from industry to industry, from business to business. So figure out what these activities and actions and ultimately the doing is for your particular, goal or whatever the case may be, and acknowledge the importance of this side of success. The spiritual side of success cannot be overlooked. And feeling is the secret. Feeling is the secret. Maybe something to write down in your notes is that quote right there. Feeling is the secret. If you feel good about the activity, it doesn't feel like a chore. I jump on these sessions and I love them. I love doing this. I love doing these trainings. It doesn't feel like a chore to me. I love these activities, being able to educate, being able to impact people, and it helps me work towards my goal. Okay, which is to ultimately, bring this to as many people as I can because I know the positive impact it can have on their lives. When I'm doing the activity of getting towards that goal, and I have it more specific, I won't share it, but that's generally speaking what I just shared, the goal. I feel good about it. The activity isn't overwhelming. I'm not saying, oh, I'm going to jump on a Zoom and every day maxed out capacity on Zoom calls. Guys, you guys know this? When I first started doing training in the space, I would have like 5 people on a Zoom call. And I would actually do it at that time. I was actually doing sessions like every single day. This back in 2019, 2020, And so again, feeling good about the activity is really, really important. Okay. So this is a third success principle that I wanted to leave you guys with. There is obviously other success principles I could get into, but I felt that these were the most impactful and empowering success principles to consider when it comes to everything we got going on here. Because I could literally, and I do this most of the time, by the way, I could literally just be on the charts, giving you guys market updates, trading ideas, outlooks, stuff like that, and that's it. But the reality is the charts and the trading is actually way less of the equation than the mindset, the discipline, the spiritual side of this thing, especially with trading, guys. Okay? Trading, it's like you could have an amazing 3 months in a row. All it takes is one bad day for all that 3 months of progress to go down the drain. Think about it. You ever compounded a trading account to a certain level and then all it took was a couple trades to wipe everything out? That's where the mental and emotional stability and discipline and the spiritual side really comes into play. And actually, you can see it with your trading. So with that being said, I wanted to lead the conversation with that. Now what we'll do is we'll get into a little bit of a market outlook. I'm going to go fairly quickly through this because we have a lot planned here in Miami. There's a bunch of us that are out here. And there's, time is of the essence, essentially. So I want to be intentional with timing. So we're going to do a quick market outlook, and then we'll go into the final back to the basics lesson that I have for you guys, which is going to basically be adding 2 components to what we've already discussed. So the concept of institutions having to sell to buy to sell, the concept of why the institutions have to do this, manipulating liquidity, capturing liquidity, taking advantage of that, so on and so forth. We're going to add a couple of things to that. And ultimately, I'll pull this up. This is actually something you can, write down as well. But it's ultimately the A+ entry model recipe. Okay, this is the A+ entry model recipe. I'll make this a little bit bigger. Again, you could take a screenshot of this, but you'll get it more ingrained, and you'll retain the information much more if you actually write this out. Okay, so I'll give you guys a second to do so, and take the time that you need. to quickly jot this down. And while you're doing so, what I'll do is I'm going to pull up another tab here momentarily for Forex Factory. Okay, I'm just going to read the chat as well here, make sure that I have got everything caught up to speed here. Good. Doesn't look like there's any questions, which is great. Perfect. Amazing. Amazing. All right, drop a 1 in the chat if you got that written down. You got that written down for the A+ entry model recipe at a glance. Let me know if you guys are good to go and move forward from here. I'm seeing some 1s dropped in the chat. Drop a 1 if you're good. We can move forward into the market outlook section and or the market outlook section of the call and the stream. Okay, I'm seeing a fair amount of 1s. Perfect. Okay, perfect. So first things first, Forex Factory, for those of you guys that are here specifically for Market Outlook and maybe you're newer and wanting to kind of establish a routine for yourself, Sundays are a great time to take a look at and gauge the news that will be released throughout the week. So for example, this website, by the way, forexfactory.com, okay, you can filter out the different news folders. So yellow is low impact news. The orange folder is medium impact news, and then red folder is high impact news. So I'll sift through and only look at the red and silver folder, which is usually bank holidays or non-economic events. Okay. So today, and this is already passed, but we had the German federal election. This is actually, sorry, this is not today. Wait, is today Sunday? Yeah, today's Sunday. All right. Yeah, we're good. Monday, no high impact news. Okay, we honestly have a pretty slow week. Okay, we do have GDP and unemployment claims on Thursdays. That's probably going to be the most volatile day of the week. But I also wouldn't be expecting any crazy volatility. Next week, on the other hand, different story. Okay, we got NFP, and there's also some interest rates that are being released. Okay, so nothing too crazy on the news front. So we're going to jump into the charts and we'll go over a quick outlook together live. So last week, we did discuss on Tuesday's session the outlook for DXY, which we ended up seeing play out. So we saw price trade lower. There was this fair value gap on the daily time frame we were anticipating price to trade back into and continue lower with. We ended up seeing exactly that. So price trades back up into this fair value gap. We're going to actually talk more about fair value gaps today on this session for Back to the Basics. And we're now trading inside this key point of interest on the daily time frame. This week, my anticipation, based on how we're currently looking, is actually for price to take out this low. Maybe it happens this week, maybe it doesn't, maybe we bounce from here. But the two scenarios that I would be anticipating for the dollar and DXY, the dollar index, as a whole, is either we do bounce from this zone and trade higher, or more likely, in my opinion, we continue to trade lower and ultimately come deeper down into this lower side of the trading range on the daily time frame. Okay, if we're taking a look at this ultimately, this is like smaller time frame range from swing low to swing high. We have the higher time frame range from this low to this recent high. And so my anticipation would be for us to come below the 50% and look for buying opportunities at a quote discount, which we're also going to be getting a little bit deeper into with the training portion after we're finished here. Okay, so that's the quick update on DXY. Obviously, we just look at this to get a bias for the week with US dollar pairs. But if we take a look at Euro USD, all right, Euro USD, this is where we're currently trading. This is the training balance scale training that I just did. Actually, hold on, let me really quickly. I'm going to actually take a screenshot of this. How many of you guys enjoyed the training balance scale breakdown, by the way? Maybe it's your first time seeing that. Maybe this is, something you hadn't really considered before. How many of you felt and kind of resonated with this? Okay, I'm seeing some of you in the chat, which is cool. I figured this would be of value and you guys would enjoy that and appreciate that. Let me just go ahead and take a snapshot. Boom. All right, boom, perfect. So we'll delete this now. You guys know me and my cheat sheets. Okay. Euro USD. Last week, very similar to the outlook on DXY. We were anticipating a retracement into this zone to get a bounce. We saw exactly that. I'm not sure if anybody participated in this move. it was shared on Tuesday's session as what was anticipated for the week. And there were definitely opportunities for entry out of this order block right here. If we take a look at the last down candle prior to, and this was also a news candle, I believe, if I'm not mistaken, we have the last down candle or down close candles prior to a major up move to create this high. So here, this order block being a point of interest, we end up trading back down into this zone. Okay, if we take a look at the candle, notice how, and we talked about this last couple of days, notice how it kind of is a bit ugly, right? It doesn't really give us the best candle body on the hourly time frame. If we go to the 30-minute, same kind of thing. 15-minute, really this is a fast candle. I'm pretty sure this was a news candle. I think it was from something that Trump said, if I'm not mistaken. I'm like almost 100% confident that's the case. So you can't really, you could take a look at and mark out the open and the 50% of this candle. I'm just going to eyeball it. And if we take a look at where price traded into, we did come into the open and the 50%, but we actually traded deeper than that. And I believe something just fell in the background. I don't know if you guys heard that. I believe there was a fair value gap that we traded into on that smaller time frame. So right here, that actually startled me. I don't know if you guys heard that in the background. It's kind of funny. But this is the fair value gap that I believe we traded back down into. Okay, so this is also overlapping the same zone. So nonetheless, we returned to the area. There was buying opportunity. If you were waiting for price to develop in this zone, again, still opportunity in here as well. And price is looking fairly bullish. Okay, we're looking fairly bullish from this zone. Okay, so nice reaction off a point of interest that we shared last week. And my anticipation from where we're currently trading is for price to take out the highs. I would not be surprised if we take these out literally tonight. It could be, a little bit longer than that, perhaps. But I would be anticipating Euro USD to continue trading higher, ultimately. So nice point of interest we traded back into and reacted from last week. And now it's just a matter of, price continuing higher as DXY, the dollar, is continuing to fall, right? So did anybody, by the way, catch Euro buys from what we shared on last Tuesday's session? Let me know in the chat if anybody caught buys from this zone. Be curious to see if anybody participated in those buys. Loved it. Amazing. Always a great concept to dig in. Absolutely agreed, Brock. Absolutely. Trading balance scale. It's a good one. It's a good one. Had a buy from 4058. Nice. Got this fair value gap. Let's go. Let's go. Yes. Cool. Awesome. Glad some of you guys participated in that. Fire. Okay. So if we take a look at the higher time frame perspective on Euro, and I've been talking about how this is looking like an accumulation for a while. I'm probably going to do a Wyckoff training at some point in the near future. So look out for that. But this whole zone looks like a Wyckoff accumulation where price is kind of just consolidating, chopping around, capturing liquidity over and over again in a area where the price is low, quote low, in comparison to where we were, right? Traded lower, consolidating at a low point. And we're now starting to see what I believe is going to be that breakout to trade higher. Okay, ultimately. So daily time frame, if we take a look at areas of liquidity, all right, areas of liquidity that are left to kind of be captured, we have this smaller time frame liquidity here. There's a lot of liquidity on the daily time frame above these highs as well. So for me, based on what we're seeing, this looks like we're going to take off, to be honest. So buys would be very favorable on Euro. If you didn't catch the buys from last week from that zone, I would be curious to see one of two things, either a retracement back into this zone, which is kind of the order block or FU candle, last couple down candles prior to this up move. I don't think we're going to honestly get a retracement down into here based on what we're seeing, but we could. And if not there, this gap would be of interest for me. Just to observe and see how price can potentially behave in this zone. All right, so maybe we get a pullback into this zone and then we trade higher. Maybe we see price take out this low as liquidity and we trade back into the order block to go higher. Both of these plays would be of interest to me. Ideally before, not guaranteed to be the case, but ideally before Yeah, I think we're going to take these highs out first, but ideally before we take out these highs, because then get a pullback entry, and what can we target? Those highs, liquidity, easy target. But it looks like we might take this high like literally now. You know, what I mean, next couple minutes. I'll set an alert on that. That's the perspective on euro. And aside from that, like I said, if we do trade higher, I would still potentially look at this for buys. But very bullish, looking very bullish on Euro USD. GBP USD, very similar. We had a buy limit from last week that has yet to be triggered. Based on price action, it's unlikely it will get triggered. I'm going to keep the buy limit personally, just in the event that we do. If you feel more comfortable deleting it, by all means. If you have this pending order, a lot of people have been messaging me about it. And, you know, I'm personally keeping it, but if you want to delete this zone just because we're quite a ways away from it, I would say it's probably less likely for us to return to this buying point of interest as of right now. So with that being said, though, there is, I would say, a couple zones that I would be curious to see how price behaves in. This is still a point of interest, so I'm going to keep this on screen. But I would maybe also be looking to see what price does in this order block area. Okay, last couple down candles prior to this up move to create this high. We've seen a bit of a pullback. We actually traded into a fair value gap here, right? If we see this right here on screen, this is a little fair value gap we've returned into and so far been respecting and continuing to trade higher from. But I wouldn't be surprised if we get a retracement at some point into those zones. But it is looking very, very bullish on GU as well. And this is, when we take a look at the context and the cause behind this move that we're seeing, we took out a very significant, actually a couple very significant areas of daily time frame liquidity with this major sell-off, and we've just been bullish ever since. So what have we talked about the past couple of days with these back to the institutional basics trainings? You know, it's that the market will move from liquidity to liquidity. So we've just taken out a bunch of sell side liquidity beneath these lows where buyers have sell stop orders in the form of stop losses. And also sellers are being baited into the market as price, melts. So now we're seeing all those buyers getting stopped out and all the sellers that sold as we were down in this zone too, getting stopped out. And I wouldn't be surprised if we're now going to hunt buy side liquidity. So, highs that we have here. Okay. Maybe this zone of liquidity, we got a nice fair value gap up in here. Maybe we would trade back to that. Okay. So on and so forth. So that's kind of the anticipation is for price to continue bullish, continue trading higher. And in terms of points of interest on GU, I feel like it's too early into the week to really identify anything else. But these would be a couple of zones that I'm still looking at. This low got taken out already by these, down close candles, which is why I would say that this is also kind of a point of interest for potential buys. If we get a sell off retracement, capturing, this low and a couple other swing lows, trading into this point of interest, that would be, potential buying opportunity. We'll see how, price behaves this week. But that would be the perspective on GU. If we move forward into USD CAD, you guys are going to laugh. Still not touching this with a 10-foot pole. So it's been boring, literally boring. I have not liked USD CAD for weeks, like literally since back in January, which was actually when we hit like a 1-to-5 risk reward ratio trade on it, which was cool. But it's just been gross, in my opinion. But if DXY is trading lower, ultimately we would be anticipating USD CAD to also trade lower. Goldilocks, on the other hand, still curious to see what we end up seeing unfold here. We've seen this level of 2950 attained, which is a key level in terms of quarters theory. We haven't talked about that ever on sessions, but it's also something to consider. We've taken out these highs relatively equal. This was a buying area that we had as a point of interest. I would still keep this as a buying point of interest, although I wouldn't have a buy limit on it. So I can't remember if we had buy limits on this from last Tuesday. I think we might have. Although it doesn't say on screen, so I don't think we actually did, but still a zone that I would be curious to see what price does inside of. And notice how we're starting to slow down on gold here. All right, we've been making impulses pretty aggressively, but with every more recent impulse, it's almost kind of slowed down. Notice how this is, major move, smaller move, smaller, slower move. Same thing all the way throughout. This is the sign that price is starting to exhaust a little bit. And we could see one of two things. Either we get a nice pullback, capturing an ample amount of liquidity, and then we see price fly again. Or this is distribution, the same thing that we're seeing on Euro, where this is a big accumulation, consolidation at a low point to trade higher. We kind of see the same thing inversely on gold, where we're starting to see consolidation at a high point to eventually go lower on the higher time frame perspective. Because gold's been, I mean, we've been bullish, right? We talked about it back in November, this low being the low of basically the remainder of the year, trading bullishly for new all-time highs all throughout the start of the year based on seasonality. So we're kind of getting what we've been anticipating on golds. And daily time frame, I always love to look at daily time frame points of interest on gold. It reacts really, really nicely from zones on the daily. And if I'm currently to acknowledge points of interest on the daily, this is one daily time frame fair value gap. Aside from that, it's very healthy price action, right? This was fair value gap. We traded back into it, filled it. We have this little fair value gap, traded back into it to around the 50%. You know, price is just very, there's euros high getting taken, right? Kind of anticipated that one. But I would be curious to see what we do in this zone, but I also wouldn't be surprised. Like I said, this is starting to look like a distribution, slowing down of price at a high point for us to maybe see a higher time frame retracement and see price continue to develop in that way. So if we look at the smaller time frames now, having considered the higher time frame first, the question that I always love to ask myself is, where is the money? Where's the liquidity? And if I'm taking a look at this, as of right now, right, we did just see a liquidity capture beneath this low. That's something that's worth considering. We now have this low and this low on the hourly time frame resting as sell side liquidity. We have these highs that we could look at to potentially target. And if we get a pullback into this zone, I would be interested in buys, to be honest, to target these highs. If we fail to respect this zone and get a break beneath this low, sells are going to be more favorable. And I would be saying that we're probably seeing this as a retracement on the higher time frame, and this was distribution to go lower on gold. So keep that in mind. Keep that in mind. If we take out these lows first, I would be favoring buys to target the highs. If we do continue higher, I don't think we will as of right now, but if we do continue higher, maybe, you know, be anticipating price to eventually come slamming down, because like I said, this is starting to look like distribution, and all things considered, like seasonality. Maybe you haven't seen season. Hold on, charts.equityclock.com. Hey, write down this website for seasonality if you haven't already. We've got commodities, and if we go to gold seasonality, this is something to consider. It's the seasonal tendency of gold from 1 month to the next, and it's based on the past 20 years of data. Okay. So January tends to be very bullish. February tends to be very bullish. Notice how March, a little bit choppier. April, also usually bullish, and then choppy, boring summer. Overall, gold's trend is bullish because it's, you know, we're always seeing the fluctuation of price based on inflation and other considerations too. But hey, we've been so bullish on gold. I wouldn't be surprised if for some of these months where we're usually choppy, we actually see like a proper retracement take place. And the months that we would potentially be seeing that higher time frame retracement would be March, you know, summer months, May to July, end of July kind of thing. I mean, if we're taking a look at it on the weekly perspective, there's tons of areas that we could look at for price to return to. There's the fair value gap right here on the weekly time frame, which we're not too far away from considering on the weekly. We have these, this is like a reaccumulation schematic. Again, not going to talk too much about Wyckoff on the session. We'll save that for another day, but you know, area where price kind of slowed down, retraced to continue trading higher, right? And of course, you know, we've been super, super bullish since like the beginning of 2023. So let's see what ultimately ends up happening This is the gold chart. It kind of looks like Bitcoin if you think about it. Don't obviously considering the time frame. This is like back in the 70s, 80s and everything. But notice how this kind of has some similarity to Bitcoin, doesn't it? If you think about it. This is the monthly time frame on gold. This kind of looks like the weekly time frame on Bitcoin. Cool similarity. So that's the perspective on gold. And again, just waiting for liquidity to be taken out. This is still, in my opinion, a favorable zone to be buying from, and I wouldn't be opposed to taking buys from this area. Ultimately, if we were to take an entry off the 50% of the fair value gap, putting the stop loss below the low of the candle that creates the fair value gap, 64 pip stop, targeting these highs here. That's a 1 to 6.5 risk reward. Not bad. Take it off the open of the the order block here. Stop loss below the order block. A little bit of a bigger stop loss, not as good of a risk to reward ratio, but still a point of interest. I would be curious to see what price does if and as to when, and assuming we do see price trade into this area. Okay, and if we're looking at it in terms of market structure, this is kind of our previous low to most recent swing high. You might think to yourself, well, Donnie, why isn't this the low or this the low? And the reason for that is because this is the previous lowest point after our most recent highest point. Okay, retraced, created a higher low. We then saw price expand. We failed to create a higher high here. We then pulled back again. There was mitigation that took place here. Then we go and we break out above this high to create the new swing high. So this is our current trading range. It's from this low to this high on, I would say, that hourly and 4-hour time frames. So the same way we had this drawn, this is like some smaller time frame one, but if we draw this with the fib from here to here, this is kind of what we're dealing with. Notice how this is below the 50% at a discount, and that's favorable for buys. Ideally, that's what we want to see, in fact. Right, so this is a nice zone. This is still a nice zone. We talked about it last Tuesday. Still a very nice zone I would be looking for buys from. And I would want to see it actually this week going into like the first few days of the week, Monday to Wednesday. Maybe we see it on Thursday, okay, because we have that news event. But I would be favoring us seeing that before Thursday. Ideally, we see like the low of the week established on like Wednesday, maybe Thursday. But this is, like I said, I'm liking this zone quite a bit on gold. So let's see what ends up unfolding and happening. Maybe I'm totally wrong. Maybe we just dump from here, right? Okay, let's see the chat. I'm going to buy for USD CAD. Got to put my phone in airplane mode. See you in Miami. Yes, definitely see you in Miami, Jordan. Safe flight. Scarcity is higher on Bitcoin. This is true. You can't just find an asteroid and start mining it, like you can with gold. So definitely scarcity is more favorable for Bitcoin. Bitcoin is like everything that gold is plus more, and it's even better than gold. From a using it as like a currency, or not a currency, but as a form of money. It's way better than gold. Gold is good, don't get me wrong, but Bitcoin does, I would say, have a leg up over gold in terms of being like a universal global means of exchange and form of money. Bitcoin, speaking of Bitcoin, this is the kind of anticipation that I have on BTC right now. I actually have buys from this low that usually I don't trade Fridays, but again, Bitcoin is Bitcoin, so I'll trade it any day of the week just because it's kind of its own beast. But I do have buys from this low after we took out ample areas of liquidity. I was expecting price to trade into this fair value gap, and we didn't. And decided to execute buys from here. I actually got stopped out of buys on the way down here. I think I had buys out of this zone. Didn't share them as trade ideas, just my own personal trades. And so I re-entered after taking out these lows because I acknowledged the liquidity being present here and this being below the 50%, so still favorable for buys. But I wouldn't be surprised if we get another sell-off capturing these lows as liquidity to then trade higher. If not that on BTC, we just move from here. That would be great. You can tell my Bitcoin, market makers that I'm okay with price flying from here. Okay, let them know. Call them up. Let them know. Hey, Elon, you can send Bitcoin to the moon now. Right? It's not Elon. I'm just joking. But the institutions from the perspective that we have here, they've been scaring a lot of people out of the market with the, Trump meme coin, with the Melania, meme coin. Okay, there's all these different like flash crash events seemingly on like Sundays and Mondays that scare a lot of people out, shake a lot of retail traders out of the market. And it's crazy because if you look at all these major spikes on Bitcoin that are still technically respecting market structure, and this is like the low that we need to break before, people are kind of like really scared. And it's actually maybe even more favorable that we do see this because we've been consolidating here for so long. Getting a quick V-shaped recovery sell-off into this wouldn't be out of the question still. I know I've said that, at different times, it's seeming like it would be less likely to take place, but actually based on what we're seeing, I wouldn't even be surprised if we get this. Because think about how many people are super done with crypto if we get that. A 10,000 pip sell-off to then just V-shape recovery and absolutely fly kind of makes sense from one angle. But the other angle is that every time we've seen these sell-offs, the altcoins are making like lower lows, a lot of them. So the altcoin holders are kind of paper handsing, selling, and getting out of the market as we're seeing Bitcoin condense and start to get ready for its next move. It's just a matter of, do we sell off and then fly, or do we just fly from here? That's really where we're at on Bitcoin. And I do think that we're going to have more of an idea of what's to unfold going into March and April. March is a pretty interesting month. We've got, there's some astrological things that are taking place that are actually relevant in crypto. If you take a look at the astrological relationship with something like the moon or like eclipses, specifically solar or lunar eclipses in crypto, it's actually really fascinating. I won't get into it today, but it's actually interesting to backtest it. So we have like there's a specific eclipse that's taking place in March. And there's also the next interest rate FOMC news, event. So, and I wouldn't call me crazy, but March, if you take a look back at March 2020, obviously this is 5 years later now, 2025, but that's when things really got crazy with lockdowns and, the pandemic and everything. So I'm not saying that that's what's going to happen again this March. Of course not. I'm just saying who knows what could happen in March to be the excuse for a major sell to buy motion. You got all these people that are getting like $5,000 Doge checks in the mail in the States. I don't know if you guys heard about this with Elon and everything he's doing. Apparently, there's going to be this stimulus check for like 5K that a bunch of American citizens are getting. What happened last time there were stimulus checks? Take a look back, 2020, 2021. People were getting stimulus checks for, not working or whatever, and not, knowing what to do with it. So they threw it in the markets, supposedly, and really it's just exit liquidity for the major institutions and liquidity to take advantage of from an institutional lens. So maybe, and it's even more money this time, 5K USD, maybe that's something that we see play out again. And that's what gives kind of that ends up being the excuse and the catalyst for crypto to really go into its next leg higher. Again, I'd say this is more speculative. It's not really based on technicals. I wouldn't base any of your decisions off of that, but this is just, I'm throwing it out there as food for thought. Okay, food for thought. So, and I'm very confident we will see that next wave higher. It's like 120 to 140K on Bitcoin very soon, like less than 3 months from now. Less than 3 months from now. Or maybe, it could be going into the summer. But ideally it's within the next 3 months. So anyways, two scenarios. Again, daily time frame, still a point of interest. It's been a point of interest since November. Daily time frame for value gap. Maybe we get a quick V-shaped recovery. I think that would be, a huge catalyst for people to jump out of the market and paper hands and sell and, get scared again. Or we just fly from here. That, of course, is the other scenario that is possible. So I'm not going to complain based on either, because either way, there's immense opportunity to just stack orders, stack crypto, position yourself for that next move higher. And yeah, it's going to be good. So, okay. based on the time, ladies and gentlemen, based on the timing, I'm going to go into one concept that I think is necessary from the A plus entry recipe that we haven't yet covered on this back to the basics training. I was hoping to get into two, but based on the timing, we're just going to get into one today. And stay tuned. Maybe we'll find the time and place to do another back to the institutional basics to pick up where we left off. But ultimately, the concept that I wanted to get into was fair value gaps. I wanted to get into market structure a little bit too, but I'm gonna say that in terms of institutional basics, fair value gap is the more important thing to focus on in this particular scenario. So if you guys are ready to lock in with me for another 20 minutes or so and really unpack fair value gaps and how to enter off of and understand what those actually are, drop an 8 in the chat and we'll move into this momentarily. Amazing. Okay. So we've talked a lot about the institutions on the past couple of sessions and how they need to sell to buy and buy to sell. And a lot of the times, what happens when these major institutions are taking their trades is the market will move extremely quickly. We see this a lot with news events. If you've been on the sessions that I've done and that Ralph's done, we've collaborated on these NFP sessions. Maybe some of you guys have experienced those live, whether it was February, maybe it was January. We did both months and I had a lot of fun with it. Right? Shout out to Ralph one time. Absolute legend. And we had, we saw firsthand the amount of volatility that comes with that kind of a news event. And really all that's happening is institutional money is really flowing through the markets and they use the news as the excuse to manipulate the price, to manipulate the market, to capture liquidity. So that I think is the best kind of way to get into this conversation of what we call fair value gaps. Okay, now I'm going to see if I can send myself the institutional trading dictionary to share with you guys because I am borrowing a computer for this session, so I don't have it as readily available. However, if I pull this up, give me 2 seconds here, you guys, to pull this up. Boom. And here we go. Here's the other one. Boom. Okay. So let me pull this up for you guys. So we can read the definition. If you don't have the institutional trading dictionary, I'll pull it up and I'll drop the link in the Zoom chat for you guys. Let me see if I can. Okay, Telegram. Okay. See if we can get this working here. All right. Boom. Boom. And boom. Okay. So this is the institutional trading dictionary. If you haven't seen this before, welcome to the institutional trading dictionary. But this is essentially a tool to illuminate, which basically means to just establish that foundational understanding of certain terminology, certain information, certain jargon, if you will, that we use as institutional and smart money traders, investors, and really understanding institutional concepts as a whole. So in here you have fair value gaps. This on screen, I'm going to go ahead and zoom in a little bit here. This right here is what I would encourage you guys to jot down in your notes. Okay. Fair value gaps. All right. Write this down verbatim in your notes. Okay. Write this down verbatim, word for word. Take a moment to do so. Again, you could take a screenshot. You're kind of doing yourself a disservice. Write this down word for word. That way you retain it much better. I'm dropping the link to the institutional trading dictionary in the chat as well. So if you feel called to even just look at it on your own by pulling that up, it's just going to ask for your basic info, same info that you would use for your economy account, to then get forwarded to the document. And from there, you can you can't save it, you can't download it, but what you can do, and I'll show you guys because I'm actually on a computer that, I would have to request edit access. Don't do that. All you got to do is go to File, and then, oh, interestingly enough, add shortcut to Drive isn't in here. That's good to know. But you can bookmark the website. And you can bookmark the website. That way you can refer back to it whenever you like. Okay. Interesting. Thought for sure add shortcut to Drive would be in here. Good to know. Good to know. I should have tested that out from a different computer before. Anyways, fair value gaps. Let's read this together, okay? A fair value gap is an inefficiency in the market where price has moved too rapidly, leaving behind gaps or voids that have not properly been filled or not properly filled by both buying and selling orders. So the best way to think about this is using news as an example where we see price move astronomically fast, extremely fast, with incredible speed. When this happens, slippage is something that happens in the market as well. So maybe you've experienced slippage before where you had a stop loss or a take profit set at a certain price, but your trade closed out at a different price. And you're like, huh, my broker might be trying to pull something on me. My stop loss was here. It took me out of the trade here. Lost more money. What's going on? Maybe you've messaged your broker before saying, hey, what the heck is up with this? I did when I first started trading. I was like, hey, so you think you can like send me back that extra $10 that I lost? They were like, no, dude, you can't just get the $10 back that you lost. It's just slippage. It's what happens when the market moves really quickly. So a fair value gap is a way of you reading and understanding when and how, or when these things happen and how to respond to these types of events in the market. Continuing in the definition here, it says these areas often become significant points of interest for institutional buyers as price typically revisits these areas, these fair value gaps, to balance or rebalance the market. Super crucial. Every successful institutional concepts trader, smart money concepts trader, ICT trader, guys, another way of referring to institutional concepts, okay, is using fair value gaps in confluence with what we've talked about the past two back to the basics lessons with order blocks and mitigation. This is the same kind of deal, if you will, but with a slightly different reason for as to why price returns to these zones. Okay. The sell to buy motion that you might see from an institution at a low point in price, capturing, let's say, relatively equal lows. Maybe price was looking like this. Relatively equal lows, quick sell to buy. Okay. Mitigation is when price comes back to this zone so the banks can essentially break even on their temporarily sacrificed sells. Okay. So you get a pullback to then take buys and go higher. Okay. Usually there's actually a fair value gap here and present in the same kind of zone. Sometimes you'll see a fair value gap kind of here on the way out of that sell to buy area. And this is something you can also anticipate price to return to and bounce from. Now, in a second, I'll pull up a screenshot that we use as a cheat sheet for fair value gaps. This is one that I would encourage you guys to screenshot as well as doodle or draw the diagram in your notes. Let me just find out where I have this in my saved messages. Here we go. Boom. Perfect. Forward. Okay. Excellent. Let me pull this up. By the way, there is a definition. I'm not going to get into it, but BISI and SIBI, these are the two different ways of referencing a fair value gap. Okay. The same way that we have liquidity referenced as buy side and sell side liquidity, a BISI and a SIBI is basically just a way of referencing a bullish or a bearish fair value gap. Okay, you can read these definitions in your own time. Like I said, just use the link to the dictionary that I'm dropping in the chat, and you can save this. You can read over it, write it down as well. Okay, it's important to write down. We just don't have the time to go into it as detailed on this session. So let me share this this screenshot here with you guys. Let me see if I can pull this up properly. Boom. So this is the cheat sheet. And again, for now, maybe just take a screenshot of this, and you can draw it out after the session. because it's going to take you some time to probably draw it out, right? But this on screen is the diagram for fair value gaps and the easiest way to kind of understand and identify fair value gaps. So write this down in your notes if you're taking notes, okay? A fair value gap is a 3-candle pattern. A fair value gap is a 3-candle pattern. Now, I say pattern because you'll identify fair value gaps the same way over and over and over again, considering and referring to 3 candles, typically. All right, so a fair value gap is a 3-candle pattern. So on screen, we're going to focus on this example on the left-hand side first. Here we have the 3 candles that we're going to reference. Candle number 1 is the one before a fair value gap is created. Candle number 2 is the candle that creates the fair value gap, and we'll talk about what that actually looks like in a second. And it's also drawn on screen, but we'll unpack it some more. Candle number 3 is the one that comes after the fair value gap. That's the way that you're going to look to identify a fair value gap. So what exactly am I looking for with these 3 candle patterns? Because there's 3 candles back to back all the time. In fact, there's, however many candles are right here, right? So how do I identify the actual fair value gap? Well, here's how you identify it. Healthy price action is when you have candles that are basically overlapping with their wicks, okay? So notice how, here you have a bearish candle, here you have a bullish candle, here you have another bullish candle. Notice how the wicks are covering the entire previous or middle kind of candle body here. Okay, you have this bullish candle, we then have the following bearish candle, and you have the next bearish candle. This is all clean, healthy price action. There's wicks covering everything. Whereas if you take a look at this right here, there's no overlap of wicks. Okay, there's no overlap of wicks. This is what we refer to as a fair value gap, because we can infer and we can imagine that, hey, this is a pretty major candle, a pretty fast moving candle, that there was probably slippage that was experienced in this zone where we had a buy side imbalance, a sell side inefficiency or insufficiency. Okay, it was insufficient amount of sells offered in this area because of how quickly price was bought up and traded higher. So the market will want to return to this fair value gap to balance out the price. It's almost like a good example I could give you too, an analogy, is if you were to take let me actually think of what I could use here as a potentially even better analogy. Okay, I just came up with this one. I think you guys will like it. I'll use the other one too, and you'll see, maybe you'll resonate with the other one more. Imagine you were to take a bottle of water and you're outside on the pavement. It's a nice sunny day, bright sunny day, no water anywhere on the ground, okay? And you take a bottle of water and you just dump it all out in a straight line, okay? And you do it quickly. So it's not like you're pouring slowly and progressively moving from left to right or right to left. It's like quick, it's like, boom, okay? You're going to see droplets of water and then other droplets of water, but they're not necessarily going to be all connected in a straight line. There's going to be gaps. That's kind of the same thing with a fair value gap. The other analogy I was thinking of using is, let's say you took a crayon and a blank piece of paper and you went really quickly across the page. Instead of it being a perfectly straight line, it'll still be a line, but there's going to be some gaps. There's going to be some missing areas of almost blank space where there should be, you're like, technically I took the crown, I went, like there should be a line there, but I just went so quickly that it's not as clear as it would have been if I went slowly. This is what a fair value gap is in the market. It's here we've taken the crayon and we went, price expanded very quickly, very aggressively, and there was no opportunity for the market to efficiently offer selling in this zone. Because of how quickly this candle printed to the upside, this candle sold off, but it never actually filled in and overlapped these wicks, properly offering sells in that area. So what will the market tend to do? The market will tend to retrace into that fair value gap, just like we do here, and tend to rebalance the market. Now, there's a couple different ways you can enter off of fair value gaps, and I have lessons on this in the Institutional Trading Bootcamp. So I'm not going to go too in depth with it today with all the different entry models. Maybe what you could do if you're on this session and you're wanting to go over the fair value gap recordings. Okay. And yes, the question in the chat, you will tend to see price come back to a fair value gap. Not always, not every time, but most of the time you will eventually. Okay. But what you guys can do is you can actually message me. I have the fair value gap trainings accessible, even though ECA is down right now. I just have it like unlisted on YouTube. It's not going to be like that forever. Okay. Just so you guys know. But if you don't already have me on Instagram, you can message me on Instagram and I'm happy to send that, those recordings to you because it goes into more detail. Everybody that's on this session that's hearing me say this, you access this stream from Solex, so you have an active package. And so I'm happy to share those videos with you. It's clear to me that you would have an active package, right? Once they're accessible on the ECA, it's like, just refer to the ECA, or refer to wherever the videos are accessible. Okay. But if you message me like, hey, could you send those institutional trading bootcamp videos on fair value gaps? I'm happy to send them to you guys. Happy to. What are the instances where a fair value gap gets invalidated? Those videos go a lot more detail into that. It's a great question. Great question, though. Okay. So I just wanted to pull this out. This is how you can, message me for the fair value gap official and more in-depth overviews. But at a glance, the way that we will look to anticipate price to respond in a fair value gap area is one of two things. Either we'll see price trade back into the fair value gap and give a bounce, or we'll aggressively see price trade back through it and sometimes even create another fair value gap, but on the other side of the market, like what we see in this instance. So here, price trades back into the fair value gap. We get a bounce. Price then, here we have another example of a fair value gap created with a 3-candle pattern. You have candle number 1. Candle number 2 melts through the previous fair value gap, technically, quote, invalidating it. But guess what? Actually, another fair value gap is left behind right here. Price dips back into it, continues lower. So, like I said, this is something I have a lot more material on. And if I had the time to go even deeper into this, I would today. But instead, I would just, refer you guys to the Institutional Trading Bootcamp videos, which, again, you can message me for them or just wait till they're accessible on fair value gaps. How to structure entries. There's multiple ways to go about doing it. The one way that we'll overview live on the session over the last couple of minutes here is as follows. Okay, I'm going to pull this back up. Again, if you want to message me on Instagram for those recordings, you can. And we'll jump over here and I'll basically illustrate how you would want to identify and look for an area to enter off of while considering fair value gaps. So let's see if I can find a proper example here. Let me think. We can take a look at gold's news from, I believe it was this 4 hour? Yeah, this is a good one right here. So we use this as an example. This was from, I believe, CPI news. Okay. So here we have gold. Gold, I'll tell this to you guys right now. Gold loves rebalancing fair value gaps. Okay. Every market tends to enjoy, it's okay. I'm just pretending it's like a person, they enjoy filling fair value gaps. The institutional algorithms is really what is programmed to rebalance the market. But essentially, here we have that 3-candle pattern where we had, look at all this, right? Clean price action, wicks are overlapping beautifully. Then you have this kind of fast up move, followed by another fast up move, followed by another one. And this is like this is like the taking of the crayon. It's the pouring of the water bottle. And there's like gaps that are left behind where there isn't overlapping or healthy price action where both buying and selling is offered equally in these different price levels. Slippage is taking place. So from the 4-hour time frame perspective, if we think about that cheat sheet we just looked at, it's a 3-candle pattern. So here you have the first candle, which is it's just a candle printing. Second candle is where the major move takes place. Third candle, we see a little bit of a pullback, but there's now this gap left behind. Notice how the wicks are not overlapping in this instance. Look at how the wicks are not overlapping in this particular instance. Okay, instead of us seeing a wick to wick overlap, we're seeing a pretty, I mean, this is, to be honest, a pretty big fair value gap. Like this is around a 70 pip fair value gap, almost a, basically a 75 pip fair value gap. So the ideal scenario is for price to return to this zone. We're currently bullish. We're in a bullish environment. So when we have a fair value gap like this, which is from a bullish candle, we would be anticipating price to retrace and give a bounce to continue higher. It doesn't always happen, okay? But that's the ideal scene and the ideal anticipation. If we take a look at what we see here, sell down into that, this is also a fair value gap back here, and we bounced. That's the kind of reaction we like to look for out of fair value gaps that have been yet or have yet been traded into. So as we play out price, we notice that price does get down and actually fill almost entirely to a T this whole fair value gap. Notice how we wick lower. Okay, we wick lower. Here's that candle that creates the wick. We trade into this zone. All right, you can see the candle's wick right here. Whoops. Just opened the App Store by accident. Okay, here we go. We're back. So here, massive candle wick. This is a result of news actually as well, CPI news. But we trade back into this fair value gap and bounce beautifully. What happened here is the market offered selling where selling had previously not been efficiently offered or sufficiently offered. Because now we're selling down into that zone. It's filling in those kind of gaps, those missing. It's like taking the crayon, going, boom, seeing where those gaps are, and then going back over it with the crayon again. I actually like that analogy. Yeah, it's good one with the water bottle too. It could work well. It's like you get another water bottle and you fill in the gaps where the line was not properly created. Okay. I think analogies are effective for teaching and understanding. But this is essentially what you can anticipate with fair value gaps. So the way you could enter off of this is wait for price to trade into the fair value gap, look to take a buy position. How you can enter off of a fair value gap, where to enter off of a fair value gap is overviewed in those videos that I've mentioned. So I'll go over them very briefly, and then I would encourage you guys to review those recordings, but you can enter off the open, the top of a fair value gap, the 50%, or the full fair value gap fill. My favorite and my preference is always the 50% of the fair value gap. But there will be things that I consider to determine which I would prefer to enter off of the open, the 50%, or the full fair value gap fill. So that's the most common, the most typical, the most ideal scenario of how to enter off of a fair value gap. Same thing, vice versa, where let's say we had let's see if I can find an example. Here's one right here. Okay, and you can identify fair value gaps on all time frames, guys. I saw somebody message in the chat if you can find these on smaller time frames or higher time frames, you'll find it on both. You'll find it on every time frame. Okay. So here, check this out. This is actually a cool example. Here we have a fair value gap, pretty major one. Fast, aggressive move higher. Little wick trades back down into, some of this candle, but we don't overlap. Again, look how the wicks are not overlapping here. We don't have wicks overlapping. There's like this gap in between. So there's your fair value gap. Price, instead of giving a bounce off the zone, we melt through it. But not only do we melt through it, there's actually another fair value gap created in its place in the opposite direction. You'll see this. If you backtest this, you will see this time and time and time again, where we go from fair value gap, instead of bouncing from it, when we do invalidate it, we just create another fair value gap in the opposite direction. It's called inversion. This fair value gap is respected. So you have candle number 1, candle number 2, which creates the fair value gap. And then, of course, you have candle number 3, which, fails to fill and overlap those wicks. But now that's your fair value gap zone to anticipate price to return to. Here we see price return to it. We get a full fair value gap fill this time, and then price continues to quite literally melt from here. Well, I mean, I shouldn't say quite literally melt, but the next couple of candles we melt from there, and we see price then continue bullish. But again, this is a bullish market. Here, taking sells off the fair value gap is not going to be as favorable as taking buys off of those kinds of fair value gaps, because we're always wanting to consider the market structure and the trend as a whole. Okay. So guys, like I said, this is the tip of the iceberg when it comes to understanding fair value gaps, when it comes to understanding how to enter off of them. And so my best recommendation would be to just reach out if you want those videos that unpack it even more. You can just message me on Instagram, just say, hey, listen, ECA is down. I'd like to review those fair value gap videos, and I'm happy to send them over to you guys. And so if you don't have access to Instagram, if you don't have access to Instagram, I wonder, do you just not have access to my Instagram page or just in general? Because you should be able to just download Instagram, right? Take a buy from this fair value gap, didn't close the TP1. It's all good. It's all good. I have the pictures pulled up here. So are you still in this Euro USD fair value gap buy then? Mine is suspended. Oh, okay. Got you. Got you. You can message me on Telegram. It's the same username as my Instagram. Should find me there. I don't usually respond there though, so just be aware of that. That'd probably be the only other suggestion I would say in that case. Instagram is the better way to get a hold of me. And even then, it's like, lots of people message me, right? But guys, with that being said, excited to see how you guys apply the material that we shared on today's session. Hopefully you got some value. And I really felt called to do a back to the institutional basics series of sessions and it was popular demand. A lot of people were asking for it. So figured, hey, why don't we take the past few days to deliver that institutional trading, back to the basics lessons, while also including some of those like success principles that are universally applicable for you guys. And yeah, like I said, I hope that you guys got some good value from that. I'm going to let you guys go just because of the time. I would love to stay on here. Trust me, I would love to stay on here and continue to share some more value and some more examples, but we'll save it for another time. And yeah, appreciate you guys once again for the love in the chat, as always, the love on social medias as always. And looking forward to keeping in touch with you guys and seeing you guys again soon. But yeah, I'm gonna let you guys go. Enjoy the rest of the trading week. Keep in mind the market outlooks that were shared, and looking forward to seeing you guys again very, very soon. Much love. Peace out, everybody. Take care.